Good evening. My name is Jackie Knight. I'm the Corporate Training Director for STC, and I'm glad to have you join me for tonight's educational webinar. This evening's webinar is a little different. I am going to give some preliminary information, and then I am going to be answering questions. I've received a number of questions in advance, and those that I received during the webinar, I will also answer once I have finished the preliminary information. So tonight's webinar, before I start, I do need to tell you just a little bit about STC. We are a retirement plan administrator only, so we don't provide legal, tax, or investment advice for our clients. We also don't represent or sell any securities or investments of any kind. We are not a registered investment advisor, and we don't represent or endorse any investment opportunities that I might talk about this evening. What we do recommend is that you consult with your legal, tax, and investment advisors prior to making any investments. Now, this evening's webinar is going to cover some basic information about self-directed retirement accounts. I'm going to review the investment options that are available to you with a self-directed account. And we're going to talk about the guidelines that apply to all retirement account investing, self-directed or not. And then I'm going to give you a little bit of more detailed information about the retirement account LLC structure that STC uses for each of its clients' accounts and why we offer that. I'll review all of the services that STC offers, and then I will open the floor for your questions. So first, let's get started with a definition, because some people do have some incorrect ideas about what a self-directed retirement plan is. It is not a particular type of plan. Rather, it means that you are holding your retirement account with a company that permits you to choose any type of asset that is allowed by law. And so by the IRS rules or the Department of Labor ERISA rules, whichever, depending on whatever kind of account you have. So that would mean that you could invest in a self-directed retirement account in what some people consider non-traditional assets like real estate. So real estate is a viable, allowable investment in a retirement account. Self-direction also means that you are going to manage your retirement plan's investments. You are going to make the decisions that relate to those investments. So let's just say, for example, you do decide to purchase a piece of real estate. Perhaps you decide to buy a house in a college town that you are going to rent to students. So you would decide what kind of renovations or upgrades or appliances you might want to be putting into that property. You would determine the rental rate. You would be able to choose tenants. So you would make the decisions that would relate to your plan's investments. So basically you have control over those decisions. Now, as I mentioned, a self-directed plan is not a type of plan. It really is that you're holding it with a company who permits you to self-direct. So let's talk about a few different very common types of retirement plans. A traditional and a Roth IRA, individual retirement account or arrangement. You may have heard of these. These have similar annual contribution amounts. So for 2022, actually the amounts for these plans have not changed. You can contribute into each of these plans a maximum of $6,000 from your earned income. If you are 50 years or older, you can add another $1,000 to that, making it $7,000. That's actually the same as it was last year. The difference between these two plans is that contributions to Roth IRAs are actually made post-tax, meaning you're going to pay tax on that contribution in the year that you earned the money. Then that's different than most retirement plan contributions. Most of them are pre-tax. You make the contribution and those monies are excluded from your taxable income that year. And rather, they're included when you take the distributions. With a Roth, your contributions are taxed, but then as those monies in your account grow, when you take distributions from a Roth account, after you've held the account for at least 5 years, 60 months, and you've reached the official retirement age of 59 and a half, according to the IRS, then you can begin taking qualified distributions from a Roth IRA, and those distributions will not be included in your taxable income. So that means that the growth in your Roth account really is earned tax-free if you take a qualified distribution. So that is a significant difference between a Roth IRA and most other types of retirement accounts. The maximum annual contributions for both the traditional and the Roth, again, are identical, $6,000 or $7,000 of your earned income, depending on your age. A SEP plan is a simplified employee pension plan. This is often used by maybe small business owners who have an employee and an employer contributions to the plan. It can also be used by sole proprietors who are both employer and employee, and it does afford you larger plan contributions. So a SEP plan in 2022 has a maximum contribution of $61,000, and if you are, again, 50 years or older, you're allowed to, that is $3,000 more than last year. So $61,000, it was $58,000 in 2021. And the next plan that I wanted to talk about is the simple plan, Savings Incentive Match Plan. And this plan is oftentimes used again by sole proprietors, can be used, I've seen some partnerships use this type of a plan, and it permits you to contribute $14,000 in 2022, which is up $500 from last year. Now, I've brought out onto your screen 4 different types of plans that all say former employer. A 401k plan is normally a for-profit corporate type of plan. 403bs are used oftentimes by charitable organizations or nonprofits. TSA, tax sheltered annuity, TSP, thrift savings plan. If you formerly worked for an employer and participated in one of these types of plans, then you can roll over the money out of this plan into a plan that you qualify for, which you could then self-direct. So if you're interested in doing that, I can give you some more information about that offline. And lastly, on my list is a solo 401k plan. And this is a plan that was developed really for sole proprietors who are in business for themselves, by themselves. So they're basically the sole employee. A very limited, you could have a spouse, you could have very limited employees, very minimal hours. Basically, it's a sole proprietor in their own business. Now, this plan does have some nice advantages. It does permit the business owner to have a Roth provision on this plan, so the employee portion can be designated as a Roth. Again, that tax-free earning opportunity. It also has a loan provision, and the nice feature of that is that the loan can be used for anything. It does not have to be used for business purposes. And as long as it's paid back, the interest is paid, and the loan is paid back according to the terms of the governing documents, then you can use that money for any purpose necessary. So it does also have that loan provision. And the solo 401k plan contribution amounts for 2022 are $61,000. So that's up $3,000 from last year. And there is also a catch-up provision for that if you're 50 years or older, and I believe that is $3,000. So if you are a sole proprietor, you might want to look into one of these types of plans that permits you to make contributions from your business earnings into a plan at a higher rate than you could a traditional or a Roth IRA contributions. Now, I do want to go through the types of investment options that are open to you. with a self-directed plan, you really have a lot of options that might not be available to you if you have a traditional type plan with a bank or an investment banker. Oftentimes you're limited to stocks and bonds and mutual funds, ETFs, those kinds of investments. So you can't really branch out of those oftentimes. But with a self-directed account, you can invest in real estate, and there are lots of different types of real estate. So you could invest in a single-family home, as I mentioned in that example of the rental property. You could also invest in a multifamily home. So it could be a duplex, it could actually be a small apartment building, it could be a large apartment building. You might not be able to fully fund that investment by yourself, but you could have co-investors. So single or multifamily homes, vacation investment property. Now let me make a caveat here. Let's just say you decide that you would like to own a vacation rental property in Myrtle Beach, South Carolina. And you can do that. Your retirement account can own that property. However, you cannot personally use that property because you are a disqualified person, and I'll define that a little bit more on a future slide, but you're a disqualified person to your retirement account. So it does truly need to be investment property. You can rent it out to unrelated parties, certain family members you could rent it to, but you do need to keep in mind that it's truly an investment property, not something that you're going to use for your annual family vacation. You can also invest in tax liens. In some states, in some counties, in certain states, those tax liens provide a very nice rate of interest return on the investment, and tax liens are much less expensive than actually buying the property outright. So that is a nice type of investment for a smaller dollar value retirement account. You can also invest in raw land and building lots. I've seen some examples of folks that have invested money with a developer for raw land. Commercial buildings. So you may get involved with co-investors and pool money to purchase a commercial building. And real estate syndications, where an investor puts together a group of investors to invest in a real estate syndication. You can also purchase mortgages in your retirement account. You can also make loans from your retirement account. You can make private business investments. So again, another item here with private business investments, it really truly is an investment, not a business that you are going to work in. So that is a possibility for your retirement account. Precious metal investing is oftentimes popular when the market is in flux, or people just want to maybe feel a little more secure about their funds. So certain precious metals are permitted, and if you're interested in that, I can give you some details on what is permitted by the governing authorities that you can own in your retirement account. You can also invest in the Forex market, the foreign currency market, options, futures. I know some people are talking about cryptocurrencies now. That is a possible investment depending on who you're holding your account with. And then, of course, you can always invest in stocks and bonds and mutual funds. So one of the advantages of having a self-directed retirement account is you can really diversify into different types of assets that aren't correlated with each other, that aren't going to move the same in the marketplace necessarily. So many people feel that when the stock market is volatile, they might prefer to invest in real estate. Some people just want to diversify into different types of assets, different asset classes. Some financial advisors think that that is a very appropriate investment strategy so that all of your eggs aren't in one basket. So you really do have a wide range of different types of investments that are permitted to you in a self-directed account. Now let's just talk about some guidelines for self-directing, and this relates actually to all retirement accounts, not just self-directed retirement accounts. There are some assets that are prohibited by law. You may not own a life insurance contract in a retirement account, with one exception. If you have a solo 401k plan, then you can own a life insurance contract in that plan. But in others, it's not permitted. Another prohibited asset type are collectibles, things like rugs, works of art, stamp collections, coin collections. Those are not allowed as assets in retirement plans. Other than that, you really have a wide open range available to you. Now, there are prohibited transactions as well as prohibited assets. Keep in mind that your retirement account is given tax preferential treatment. In other words, it's not taxed when you earn monies in it, because its whole purpose is to benefit you when you reach retirement age, so that you're saving for retirement. When you reach 59 and a half or older and that's when you have this money saved to help support you. So when you are engaging in a transaction in any retirement account, it does need to be for the exclusive benefit of the plan. You can't be engaging in it to benefit someone else. You cannot personally borrow money from your retirement plan, and you cannot pledge your plan assets to secure a personal loan. Now, I have seen some loan applications that want you to list your retirement plan investments, and that's not a problem as long as those assets are not used to secure the loan. You also cannot utilize your personal credit or your personal guarantee to obtain a loan for your retirement plan. Now, that might be kind of new to you to think about, why would my retirement plan want to get a loan? But your retirement plan can get a loan to purchase real estate. So you do not have to be able to fully fund a real estate investment with the monies that are in your account. Your retirement account can get a loan to purchase. However, it must be a non-recourse loan. It cannot be a personally guaranteed loan. So a non-recourse loan is more like a commercial loan. It's going to have different requirements. Obviously, your retirement account isn't a person. It doesn't have a job. So a non-recourse lender is going to look for different things to meet the requirements of lending your retirement account. But you certainly can get a loan for your retirement account in order to purchase real estate if you would like to do that. You cannot also benefit any disqualified person with a transaction that you engage in your retirement account. So let's talk just a little bit about who are disqualified persons. And you'll see that you and your retirement account are distinct entities. So let me give you an example. Let's say you own a vacation investment property at Myrtle Beach. Your retirement account cannot purchase it from you. That would fall into this disqualified person prohibited transaction category. And if you are married, this would include your spouse. If your spouse owns that property, your retirement account cannot buy it from your spouse. And there are additional family members who are also disqualified. Your ascendants, so that's your parents, your grandparents, your great-grandparents, on up the line as far as it goes. And your descendants, your children, your grandchildren, your great-grandchildren, on down the line, are all disqualified persons to your retirement account. So if your father owns that property, your retirement account could not purchase it from him. If your granddaughter owned it, your retirement account could not purchase it from her. However, kind of unknown to me, I don't know why this is part of the rule, but lateral family members are not disqualified. So lateral would be brothers and sisters, aunts and uncles, cousins, nieces and nephews. None of those people are disqualified. So if your aunt owned that property, your retirement account could purchase it from her. If your brother owned it, your retirement account could purchase it from him. So I share these just to help you keep in mind, you know, you don't need to be an expert and know all these rules, but it helps you in thinking through a transaction that you might want to engage in. Would I be dealing with a disqualified person then? Oh, then this is a no-go transaction. There are also two entities who are disqualified persons to your retirement account. Any company, and it doesn't matter how it's organized, it can be an LLC, an S Corp, don't care. Any company if you're a majority shareholder, or any company if you're an officer, a director, or a highly compensated employee of that company. So I often have real estate investors in my audience. So let me just explain a little bit more about this entity company issue. Many real estate investors run their investing business through an LLC or an S Corp. And let's say you are that person and you own that investment vacation property in your investing S Corp. Then your retirement account cannot purchase from that investing entity, that property, if you're a majority shareholder, meaning you own not 50+%, but if you've got multiple shareholders, whatever's the majority, or if you're an officer, director. So you want to keep that kind of issue in mind too, if you happen to be a real estate investor operating through a company. Now, I mentioned that STC does set up a particular type of structure for each of our clients. We actually set up an LLC for each client's account that becomes the investing vehicle for their retirement investment. And the reason that we do that, there are a number of reasons that we do that. We offer this because it has benefits to our clients. One, it offers maximum flexibility in structuring complex transactions. So let's say you want to get a loan, a non-recourse loan, to purchase a piece of real estate. So the lender would be lending to an LLC, not to retirement account number 12345 for the benefit of James Smith, but to an LLC. It also makes it simple to pool or partner with other entities. It gives you a lot of flexibility in structuring complex transactions. This LLC structure also gives you that additional layer of asset protection, as all LLCs do. It is a true LLC, limited liability company, so it does provide that additional layer of asset protection. It also gives you checkbook control over your retirement funds. So what that means is you're going to be able to move very quickly when a good investment comes along. Now you'll notice I have checkbook control in quotes, and that is because at STC, we do not give our clients the checkbook for their retirement account. And we actually do that by design. Unless you are an expert in the rules relating to retirement accounts and investing in retirement accounts, you could get yourself into a precarious position and engage in a prohibited transaction. And the penalties for doing that can be very severe, up to entire forfeiture of your retirement account and it becoming suddenly all taxable to you. So rather than give you the checkbook, what we do is we review your transactions immediately. You send us the documents, the supporting documents. Our client services department reviews that immediately. And then if there's any question, they will get in touch with you. Otherwise, if it looks like a good transaction with no questions about its viability and it's in accordance with the rules, then we can same day fund that transaction for you if we receive the documents before our bank cutoff time. So it gives you that immediate response, but you've got experts looking over your transaction. Using this LLC also simplifies asset titling. So for an example, let's say you do want to own real estate. you can go to the closing for that realty property and you can actually sign on behalf of your retirement account. And so that's something that might be very important to you. I have talked with folks who did not have that feature in their retirement account. They were with another company, and they sent closing documents to a corporate office, and somebody was on vacation, and they sat in somebody's inbox, and it was not a good situation. So with the LLC structure, you can actually go to closing on behalf of your retirement, sign those documents, and then send copies to STC. Using this structure does also ease the whole pooling concept or co-owning an asset with others. And it's very nice. In fact, using this type of structure, you can actually co-invest with otherwise disqualified parties. So let me just tell you a little bit about this structure and how it works. I've got a schematic out on your screen now. On the upper left, you'll see your current custodian, wherever you have your current retirement plan. Let's say you decide you are going to open an account with STC, then you would complete documents that would direct your current custodian to transfer or roll over, depending on the type of account and transaction, monies to our self-directed custodian. While that is happening, we will be creating this LLC. Again, it's a very specialized LLC. Its articles of organization and its operating agreement are designed to be owned by a retirement account. So it is not a generic LLC. It is very specific LLCs that our attorneys have created. We will be setting up your specific LLC for your retirement account in the state of your choice. Once the money has been received by our custodian, then, and the LLC is complete, then the money will move from the custodian to a bank account that your LLC has access to, and the ownership, membership interests of the LLC will be held by the self-directed custodian. So then you're ready to begin investing. Now in this example, you have 3 investments. Number 1 and number 2 are wholly owned in your retirement account. But number 3 has 4 co-owners. Only one of them is your retirement plan. And the other 3, you'll notice, are otherwise disqualified persons. Your father, that's an ascendant. Your daughter, that's a descendant. And your personal money, that's you. But this is a viable, allowable transaction if the 4 parties co-invest at the inception of the purchase transaction. So our client services department will help you structure this so that all 4 parties to this investment will be purchasing from the seller, and this will be an allowable investment. And using that LLC structure makes this very straightforward. So that is one of the features that many of our clients like and use. They might have a spouse who has a retirement account and they want to co-invest with that spouse's account. They might have personal money and retirement account money that they want to co-invest in the same investment. So that is permissible. Now I want to take just a moment to talk about STC. Self-directed retirement account administration is all we do. It is our entire focus. We are a full-service administrator. So the things that we offer our clients are that retirement account LLC structure setup that I just mentioned, that protected checkbook control where our client services department reviews your transaction to make sure that it's an allowable transaction and then can same day or next business day fund that transaction for you. We do have CPAs and attorneys who are experts available to answer your technical questions. Our client services department can give you unlimited guidance on transaction compliance. And actually, I do recommend this to our clients, that before you're ready to make a move on an investment, to actually close on something, to purchase something, to get in touch with our client services department and show them the documents and run the transaction by them so that they can help you make sure that it is complies with all of the rules. And they're happy to do that. Unlimited guidance. We handle all the back office support that is required for a retirement account. So there is reporting, books and records that need to be maintained. So all of your transactions, purchases, sales, earnings, all of those need to be documented in detail in your account. So we will maintain records of all of those. We'll actually prepare financial statements for your retirement account so that you will be able to see, income statement, balance sheet, statement of cash flows. You can go through online access and see current funding for your account. When you receive monies into your account, you'll be notified of that. So we will maintain all of that financial documentation for you. We supervise the regulatory reporting that is required by the IRS and the Department of Labor, and we will oversee the annual valuation that is required each year. So we will fulfill all of that administrative back office support that you need so that you can focus your time and your attention on finding the investments that are best for you and for your retirement account. So that is our full service approach. Now I am going to open the floor for Q&A. Please do type in any questions that you have into the question box. Just type it in and I will be able to read that for you. I did receive a number of questions in advance, so let me pull those out and let me open up the question box. Okay. All right. What is the time frame to get my account up and running with STC? Typically, we do ask for 4 to 6 weeks from the time of the original paperwork receipt in our corporate office to get your account completely set up. And during that setup time, again, the transfer of the monies from your current custodian to our custodian has to take place. So sometimes that can be a long time period depending on who your custodian is and what documentation you need to send to them in order for them to release the funds to us, to our self-directed custodian. And then we are also setting up your LLC in the state of your choice. So what our operations department does is they will keep you apprised of that process and send you emails as the steps occur. Once your account is completely set up, then you will receive that notification. You're going to get a binder in the mail and all the information that you need to make investments and to make future contributions. Once my account setup is complete, what does STC require from me to purchase an investment and what is the turnaround time? So once your setup is complete, that initial setup is the longest time frame, and it can be much quicker than 4 to 6 weeks, but if you are already looking for an investment, we would ask that you start your paperwork right away because it can take time depending on your current custodian and the state LLC turnaround time. But once your account setup is complete, then we have a form that's called a Request to Transfer Funds form, and you would send that to our Client Services Department. You can mail it, but you can also fax it or email it to us, and you would complete that document, who's the seller, where to send the funds, what type of investment. If it might require backup documentation, if it's a promissory note, if it's a real estate purchase, you'll need those documents. And as long as all that paperwork is in order, and we have it by our bank cutoff time, which is 2 p.m. Eastern, then we can generate a same-day wire transfer to the seller and purchase that transaction that investment for you and have it in your account. If it's after 2 p.m., we may not be able to get it the same day, but it would be next business day. So very quick turnaround on your investment once your account is set up. Okay. Can I use my IRA funds to make an investment with my spouse? Okay, we talked about that a little bit already. Typically, the answer is no, because your IRA is prohibited from engaging in a direct transaction with your spouse or your spouse's IRA. However, if the transaction is structured properly, you can invest with prohibited parties at the inception of that transaction. So again, what we would encourage you to do, we encourage our clients to call client services and discuss those kinds of complex transactions in the early stages so that we can provide you with the information that you need, to make sure that you're organizing the transaction in the proper way and that you're not heading down the road of a prohibited transaction. Okay. I want to start investing in real estate, but I don't have enough money in my IRA to buy a property outright. Do I have other options? Well, yes, you do, and I mentioned them, but I will just reiterate them for you. You could partner with someone else, another individual or another entity that has funds that would like to invest, so you could co-own that. You could also consider borrowing funds. If it's a real estate transaction, you could seek out a non-recourse loan, so that would be another option. If those two don't work for you, a third, kind of similar but not exactly the same, would be for you to lend money to a real estate investor who's purchasing a property and then have that property be the collateral for your loan. So it's not exactly purchasing real estate. If they default on the loan, then you could foreclose on that property and potentially own it in your retirement account. So that is a secondary type of investment you could make. Okay, if you have a rental property in your account, who does the renter send their rent check to? Okay, that really depends on if you are using a property manager or not. Typically, we do highly recommend that you use a property manager so that you can maintain an arm's length distance from the engagement of your retirement account, because remember, you are a disqualified person to your retirement account. So we do recommend a property manager. And typically, when the property manager collects the rent, the checks are made payable to them, and then they forward to your IRA LLC. It would be payable to the check would be payable to your IRA LLC, the excess funds, and they would send that to STC, and then we would deposit that in your account. Now, if you aren't using a property manager, then the checks would be made payable to your IRA LLC, never to you personally, and then mailed to our office, or they could mail them to you, but you just have to send it to our office. And that way they would be deposited into your retirement account, the bank account for your retirement account. In either of those scenarios, you will get an email from our client services department that the funds have been received and posted to your account. So you will be aware of that as soon as the funds have been received. If I want to put IRA money into a self-managed stock brokerage account, can I? Can I actively trade in that account with IRA funds? Yes, you can. I've talked to many clients who are between investments. They have sold something and they haven't found what they want to invest in next, and they don't want that cash just to kind of sit idly and earn very little money in an escrow account. So you can open a brokerage account, and it can be any company that you choose. You just do need to keep in mind that the account must be opened as a business account, and it does need to be in the name of your IRA LLC. And what we will ask is that you send us copies of your monthly statements every month, because we need to ensure that you're not making any deposits or withdrawals from that account personally. Because remember, it's owned by your retirement account. So when you make a contribution to your retirement account, it needs to go through the custodian, and then the money's getting to your bank. When you make a withdrawal, you want to take a distribution, then that has to go through the custodian. You can't do that directly. So we do need to see monthly statements from any brokerage account. Okay. Okay, a traditional IRA requires the owner to begin withdrawals at age 70 and a half. Actually, has changed. That changed in 2019 with the Secure Act. Now you need to begin taking required minimum distributions, that's RMDs, at age 72. So we'll just make that comment right here. So a traditional IRA requires the owner to begin withdrawals at age 72. If one owns real estate in their account, are they required to sell it at some point in time in order to take that distribution? And if income from the property exceeds the allowable contribution, okay, that's a separate question. All right, so let me answer the first question. Okay, so here's basically the question in a nutshell. You are 72. This year, you're going to be required to take a minimum distribution from your retirement account. Let's just say you've got only one, and you own a property in it, and that's the primary asset in it. And so when the calculation is done, the dollar value of your required minimum distribution is more than the cash that you have in that account. The question is, do I have to sell that property in order to take my RMD? And the answer is no, you don't have to. An RMD does not have to be taken in cash. So what you could do, if you did not want to sell that property, is you could have it appraised, the fair market value determined, and then the portion that relates to your RMD. Let's just say, for ease of calculation, the property is valued at $500,000 and your RMD is $10,000. What you could do is do that valuation, and then you could have the top property retitled and take $10,000 worth of ownership personally. So now you own 10,000, 500,000, whatever percentage that is personally, and your retirement account owns the remainder proportion. So what that means is any expenses or income is now going to be divided up between you personally and your retirement account. But it does mean you don't have to sell that property. So you can simply take your required minimum distribution as property ownership. And so that is a possibility. Now, the second part of this question, if income from the property exceeds the allowable contribution, how is that handled? Okay, so there's a little misunderstanding here in this question. Income from an investment is different than allowable annual contributions. Allowable contributions can be made from your earned income. So if you have earned income, and I have a little sheet of paper that will exactly say what the IRS says earned income is. You can make contributions from your earned income. The earnings, it doesn't matter how much you earn. Earnings are unlimited in your retirement account. So earnings are not related to your allowable contributions. So allowable contributions can be made from earned income. Earned income, this is from the IRS, includes all the taxable income and wages you get from working or from certain disability payments. So that includes wages, salaries, tips, other taxable employee pay. And then there's some other things like union strike benefits, long-term disability benefits, net earnings from self-employment. So if you are self-employed, so again, it's going to be earned income that taxable income and wages you get from working or from other certain allowable things. So those are two different things. Your allowable contributions come from that. Okay. Just looking. Okay, this question relates to loans. Remember I mentioned that you can make a loan from your retirement account. Does STC choose the terms of my loan? No, we don't. This is truly self-direction. You will choose the terms of your loans. Now, what our client services department will do is we will make you aware if any of the terms are items that might raise a red flag if the IRS were to audit your account. And I will mention that I have heard that the IRS is auditing more and more self-directed retirement accounts because it's becoming much more well-known, more popular, and so you do want to, of course, stay within the rules and the laws. So we will let you know if any of the terms might raise a red flag. So an example, let's just think about this. Let's say you are loaning funds for 5 years at 1% interest. Now, keep in mind, I told you that the whole goal of your retirement account is to benefit you when you retire and you want to be earning money. So the IRS might wonder why you are making a loan at such a low interest rate, when somebody couldn't get that interest rate if they went out on the market. So you do need to consider that, but we will not make you change the rate. We'll just simply inform you if those terms might be placing your IRA at risk. That will be your decision to make. Okay, how difficult is it to own rental property in this IRA? Would I need to keep plenty of cash in the account for repairs and maintenance and all the other expenses that go along with real estate investments? Would I be allowed to manage the property? Okay, first off, and again, we would strongly encourage you to use a property manager so that you can maintain that arm's length distance from the property. And typically, a property manager will collect the rent and they'll hold a retainer for emergency repairs. They'll charge a percentage for their services, and again, then they'll send those excess funds on to STC for your IRA LLC. You're not required to use a property manager, but if you don't, do keep in mind that you do need to maintain that distance from your retirement account. So you cannot do any kinds of repairs. You have to be really cautious about what you are engaging. You can do ministerial activities, and our client services department can define that better for you. You will likely want to keep some cash in your account because if that property is wholly owned by your retirement account, any expenses that relate to it must be paid by your retirement account. So you will, if the furnace goes out, your retirement account will need to buy that new furnace. And if you are eligible to make a contribution into your retirement account, you could do that. But if you didn't have, let's say you didn't have sufficient earned income to make a contribution, or you just didn't have those cash funds available, then that would be a problem. So you might need to keep some funds in your retirement account for, property taxes, unexpected repairs, those kinds of things, or make sure that you can make an allowable contribution Okay, let me look at my time. I have time for just a couple more questions. Does a loan I make from my IRA have to be secured? In other words, have collateral. The IRS does not require you to have your loan secured, so it is not a requirement. However, you want to consider that your IRA's investment is more protected if it is secured, and you also want to be sure that in addition, like let's say you have a note, in addition to having any collateral listed in the note, you want to make sure that there is a lien recorded on that property. So that is something that you will want to make sure happens. It doesn't have to be secured, but of course your investment is more protected if it is secured. Are custodial groups such as yourself restricted to handling accounts within a limited region, or do you handle accounts nationwide? Again, we are an administrator. We do use a custodian for all of our clients' accounts. We do handle accounts nationwide. So in addition to that, you can actually choose any state you wish for the incorporation of your IRA LLC. And when you're setting up the account with us, you can discuss with our operations department what state you might want to be considering, and if you need assistance with making a decision about that, you can do that as well. They can assist you with that. Okay, I have time for one more question. If I want to purchase a bank-owned house, they often require verification of funds. Bank-owned. Okay, so this is a property that the bank has foreclosed on, and they've taken ownership of it again. So a real estate owned by bank. How would I verify funds that are in my self-directed IRA? What our client services department can do is we can supply you with a proof of funds letter. We ask that you call or send us an email, and we can prepare that letter and email it to you in less than 24 business hours, so we can get that back to you. What they ask is to be sure and point out the dollar amount of funds that you like listed in that letter. It can't be more than your available funds in your IRA LLC the day the letter is prepared. However, it doesn't have to be all the available funds. You know, if you're going, say you're going to an auction and you're going to bid on a property, and you have a maximum bid amount that you're willing to pay of $90,000, you might not want a letter that states you've got $200,000 available. So you would tell us how much you want in that proof of funds letter up to the cash available in your account the day that it's prepared. And then our client services department can get that to you. All right, if you have any additional questions, I see a couple that I will be answering via email, and they're not general questions. So I do thank you so much for joining me this evening, and I hope that if you have any interest in opening an account, we can certainly answer any more questions that you might have. Perhaps you know people who might be interested, or you might simply need some more information. Our website is stcira.com. There's a great deal of information there that might be helpful to you. Our corporate number is on your screen, and my direct email address is there as well. So please do feel free to email me with any questions that come up, and if you are interested in getting paperwork to open an account, we can get that to you right away so you can get started. Thank you so much for joining me this evening. I hope you will join us again next month for our webinar. And if you got an invitation to this one, you will get an invitation to that one as well. And you can always also register on our website at STC IRA. Thank you so much, everyone. Have a good evening.